Hello and welcome to the latest edition of The Exchange, brought to you by the New York Stock Exchange. I'm Douglas Jonas, your host, live on the floor of the New York Stock Exchange. Now, as a reminder, today's episode is for informational purposes only. The NYSE does not recommend investments or investment strategies. I'm joined today by Vance Howard. Vance is the portfolio manager and CEO of Howard Capital Management. Vance, thank you for being here today.
Good to see you, Doug.
I want to go into this phrase I've heard you use before, this HCM-BuyLine. What is it that means? How does it work?
The HCM-BuyLine is our proprietary indicator that we built way back in the early 90s because we saw the importance of sidestepping bear markets and the damage that a bear market could do to somebody's portfolio. The HCM-BuyLine is mechanical, it's non-emotional, it's repeatable. It's a mathematical algorithm that tells us, is the trend of the market up, Doug, or is the trend of the market down? And so if the trend of the market is down, we want to reduce exposure and we want to protect that capital that our clients entrust us to protect and to manage. We are active managers, and that means we actually manage. We're not passive. And so in a bear market such as 2002, 2008, and in the last pandemic, the HCM Byline went negative, and it really preserved our capital in such a fantastic way. And like our two ETFs are based around the HCM Byline of preserving capital in bad markets. And I want you to ask yourself this question, Doug. When the HCM Byline went negative in the mid to last part of February during the pandemic, what if the Imperial College would have been correct and we would have seen 15, 20 million deaths? We wouldn't be in this room right now. We'd all be at home, and we'd all be, and the S&P would probably be down 60%. That didn't happen, fortunately, for all of us, but the Byline systematically reduced exposure, protecting our capital and protecting our investors so that we had so much more capital coming back in when the HCM Byline went positive. Very powerful tool. In this day and age, risk management is paramount.
Well, let's go back to the ETFs. So just over 2 years ago, October 2019, you launched two ETFs here at the New York Stock Exchange. We have the HCM Byline Defender 100, symbol QQH, the Defender 500, LGH. Tell us about these ETFs. What makes them unique? Who are they positioned for?
I think they're positioned for basically anybody. And whether you're an individual investor who is looking to match like the Selective 100 or the Selective 500, and they're basically good indexes with a little bit of extra buying power because 20% of those ETFs, we can use other ETFs to enhance the exposure that we have to the index. So not only do you have stop loss protection with the HCM Byline, but you've got a lot of bang for the buck if the market's trending upwards. So you have both sides of the equation. Risk management, plus we have what we consider to be very solid performance. And you know, it's our 2-year anniversary. We're so excited to be on the New York Stock Exchange. It's really doing great for us. We've seen fantastic flows into the ETFs. I think a lot of people are really liking them.
So of course, easy for us to say now, because here we are in November of 2021, but tell me about October 2019, only months after the first launch, you hit the pandemic. How did the ETFs hold up? What happened?
Well, that's the fantastic part, Doug. You know, we were really outperforming in 19. The pandemic hit, and I can still remember it vividly when we got the Byline sell signal. And in our ETFs, when it goes to a certain point, we move 50% to treasuries, 50% still invested. The other 50% is scaled out to 100% in treasuries, and the Byline's fully negative. That happened at the end of February, the beginning of March. So we sat out that really nasty drop. Remember we had 700-point drop on the Dow Jones? We didn't sit through that. We were sitting in short-term bonds collecting interest. But the good thing is how fast the HCM Byline corrects, turning back up to put our money back to work so we catch the turn, as I like to call it. And that way we had such a powerful re-entry, and you've seen the results.
Okay, so here we are, we're in November, we're looking forward, we've got the end of the year coming, heading into next year. What should we be thinking about?
I think you need to be long this market. The HCM Byline is really positive. It's very, very strong. Again, it's a non-emotional, mechanical, repeatable algorithm. So it's all based upon math. It's not based upon how we feel. What it's doing is telling us what's actually happening in the exchanges right now. As we stand here today, Doug, the HCM Byline is very positive. Every investor, in my opinion, should be 100% invested like we are. They should be capturing the returns that are so prominent like right now and capturing that return that's been given to us.
Well, thank you very much for being here, Vance. Now, again, if you caught this episode live and you're looking for other ETF educational content, you can find it on our website, homeofetfs.com. That's a wrap on today's edition of The Exchange, brought to you by the New York Stock Exchange, the home of ETFs.